Let me rant a little bit on behalf of the Dean's List to the high net worth folks and high income folks that are out there in the United States that might be watching this. If you're making hundreds of thousands of dollars a year and even seven figures in some cases as a business owner, an attorney, a medical professional, it's very difficult to get good help at this point. Firms like Goldman Sachs, which isn't even a fiduciary, meaning they do not have your best interests in mind when they're selling you products. They're just looking for suitability. And that applies to Morgan Stanley, UBS, etc. These brokerages, major brokerages, where you probably have some of your money. They do not have your best interests in mind. And their private wealth groups start likely at 10 million in assets and up. A lot of family office firms that manage money for wealthy families, they don't even want to talk to you with assets under 30, 40, 50 million dollars in aggregate. So you feel like you're doing pretty well. You may have, a $2 million, $5 million, maybe even a $7.5 or $8 million portfolio under your belt in your 30s if you're lucky, your 40s, your 50s, and probably your 60s. And so you're left to wonder, what am I to do? Well, a lot of you have already solved some of these problems, right? Some of you have hired fiduciaries or fee-only financial advisors. And there are lots of them and really big ones today that have gigantic marketing budgets. So when you watch CNBC, what are you seeing on television? What you're seeing ads all day long for a lot of fee-only financial advisory firms. And where do they spend a lot of their money? Well, they spend it on giant multi-million dollar per month marketing budgets. Where should they be spending? It would be nice if they spent it on their investment research and their investing departments, right? Their research staff and the folks that actually make these decisions. Instead, oftentimes what you're ending up with are glorified ETFs at a higher cost. And of course, they tell you that bespoke or individualized advisory services are better than buying simple ETFs. But are you good enough to actually analyze the composites or the returns of these advisors year after year after year to understand whether they're using the benchmark they should be using to measure their own performance? And really, are they doing a good job for you? And the other huge problem most of you have is that you don't just have one advisor, which is probably unadvisable to begin with. You've got multiple of these folks, and you've got your own investment accounts. Maybe they're children's accounts, or maybe they're your own trading accounts scattered across discount brokerages like, TD Waterhouse, Schwab, and Ameritrade, and probably for some of the younger folks, Robinhood. So, and who knows what you're doing in there, right? You might be trading options. You might be buying crypto and Coinbase. You might be doing all kinds of stuff. But one thing I'm sure of is that you have absolutely no idea what your global asset allocation looks like when we think about your entire net worth outside of your primary residence, taking into account maybe even some of your real estate investing that a lot of you are doing today, and maybe even some private lending that you're doing to real estate flippers, other small businesses. It's such a troubling point in time where folks that should be getting good help have a lot of difficulty figuring out what to do. And when I meet with my peers who have net worths in the, I would say, $2 to $10 million range, when I ask them how they selected their financial advisor, a lot of them will tell me that they have very cute children, or they drive a very nice car, or that they have really nice hair. And these are the worst, most horrible ways to make these decisions. And if you did make these decisions in that way, it's okay, but you've got to have the skills to be able to measure what these high-priced folks are doing for you when a Vanguard ETF charges you, right, 5 to 10 basis points or 0.05 to 0.1% of your assets to have your money invested there. And some of these folks are taking 1% from you, 0.75% from you, sometimes even 1.5 to 2% from you. And what if they're taking a fee for performance on top of that, like a lot of hedge funds, VCs, and private equity folks do. Are they even earning that? Oftentimes the answer is absolutely not. And so what I find is lacking in the market is some sort of police force, right? To police people's global asset allocation and the folks that they've hired to help them, right? Of course, it's not in their best interest to promote any sort of checks and balances like we have in the government in America, right? We have the Supreme Court and the legislature that are supposed to be checks and balances on the executive branch, which is our president. With the advisory business that helps folks like you invest their assets, there are no checks and balances. There is no governing body that is telling investors who's doing a good job and who's doing a bad job. The only thing that they do rank are how fast some of these folks are bringing assets in, which most of the time will be very counter to your best interests, because the firms growing the fastest are the most focused on sales and marketing. And what are they not focused on? Well, they're not focused on investing on your behalf. So can they do both? Sure. Is that likely? My guess is no, and that really requires digging into the numbers. And because most high net worth folks have very demanding careers and demanding businesses that they're running, they just don't have the time to be dealing with this. And I think that as we go down this journey of the Dean's List, that this is an unmet need in the market that I would like to see filled more so than investing on behalf of high net worth folks. I think the unmet need in the market is really helping people understand where their overall financial life is lacking and what moves need to be made to solve that puzzle, right? Sort of like Tetris, and figure out how these little pieces that they have scattered all over the place across different brokers, different accounts, different advisors, and oftentimes the little pieces that they don't want to think about and don't want to pay attention to, and they hide them, they ignore them, they pretend like they don't exist, right? Maybe it's some kind of Wells Fargo account that's earning barely 1% interest with $3.5 million in it. Imagine that, right? That happens all the time. So I think there's a lot of room to help folks with significant assets solve some of these financial life policing problems and understand whether the advisors they've hired are doing a good job, what those numbers actually look like that they're producing for them each year, analyzing all of these allocations and figuring out who's really an advisor, who's a financial professional working for them, who's just helping them hoard a gigantic over-diversified portfolio. And that's what we don't want to be doing. And then also helping the same folks who might be trapped in gambling habits get out of some of those behaviors, right? Because the folks that spend too much time on various internet sites and watching CNBC, and let's say that they're gambling with a stock like Tesla or Nvidia or maybe options, if they're gambling with fractions of 1% of their net worth, sometimes that can be okay, sort of like a weekend in Vegas. But if you're gambling with 5%, 10%, 15, 20% of your net worth, for example, with crypto, and you've got a $2 million net worth outside your primary residence, and you've got 25% of it in some coin no one's ever heard of, and that coin has declined 72% over the last 7 days, we are not going to fix that specific event, but we should work on the behavior that has led you down this rabbit hole. So globally, I think these are the driving forces behind the content I'm making for the Dean's List, and also the vision of what the Dean's List can become beyond just your average registered investment advisory service, where you manage discretionary assets for high net worth individuals, or the kind of business that simply does fee only, kind of hourly or flat fee based financial planning, which to me, financial planning today, I see a ton of YouTube content about financial planning. And my eyebrow tends to go up when I watch it, because I just do not see any value in any of that service or content when ChatGPT can provide a complete and beautiful retirement plan in about 30 seconds and will help you update it on a regular basis. I think that financial planners and, I'm sorry, I'm throwing shade at the CFP designation, but those folks better find new jobs. So I do not think that that's a career. I certainly wouldn't tell my kids to pursue that as a career. So it's probably time to build something that helps the high net worth folks. It's funny, I use the word police, but really I think of it as a police officer over their financial life that is helping to enforce the rules and the regulations over all of the different characters and actors involved in managing their money, including the most important character, which is you, right? Themselves. Because oftentimes they're the biggest perpetrator of crimes against their own portfolios, and not so much the nice folks that they're paying probably fees that are way too high every single year. I'm Dean Lulkin, investing veteran, private credit CEO, and I'm here to help you grow your wealth.